Welcome everybody to Investing for Beginners episode 7, and today we're going to talk about saving and investing in the long term. History shows us that the stock market has been a successful way to make money over time. In the long term, the stock market tends to go up. For example, since 1928, the S&P 500 has had no 20-year period with negative returns. The median yearly return, adjusted for inflation, has been around 7%. In the short term, you can see great volatility, which means price movements up and down on the market. However, in the long term, despite short-term fluctuations, the stock market has historically always gone up. When going in with a long-term mindset, meaning maybe 10 years or more, you can put volatility to the side, keep calm, and don't care too much about the short-term movements. This means that long-term investing involves considerably less risk for a person with general knowledge in the stock market. I'm once again in this series going to mention Warren Buffett, and he famously said that if you are not willing to own a stock for over 10 years, you should not even consider owning it for 10 minutes. Mr. Buffett has also generously shared some of his strategies and frameworks when investing, and I am going to share with you some of these. Number 1, buy what you understand. Make sure that you buy companies that you understand what they sell and how they make money. Even though it might be tempting buying the new hip tech rockets, do you really know how they make money and how they're going to develop the next 10 years? Probably not, and this is something to consider. Number 2, invest as if you were buying the entire company. This means that you will consider your buys more carefully and will allow you to feel secure in keeping your company over several years despite short-term fluctuations. Number 3, find quality companies. Another important quote from Mr. Buffett is, "You should rather pay a fair price for a great company than a low price for a mediocre company." Number 4, do not let fear or greed affect or change your investing criteria. This means that you have to be cool and not let your emotions get the best of you when times are rough. And number 5, be patient in the long term to make compound profits. Compound interest is the most powerful force when it comes to investing. The return on the first few years of investing might not seem like much, but with patience in the long term, with returns being paid upon returns, your compound profit will likely be impressive. A tip to get a feel for the effect of compound interest is to find a compound interest calculator online and see what the returns might be with your personal investing goals. For a private investor, it is ideal to have a plan or a strategy for how and when to buy. One simple but efficient strategy is to buy regularly, ideally every month. At the time you receive your salary or student income, put away 10% for saving and investing. This is a saving rate that almost every person with a little effort should be able to reach. My personal goal is to save at least 50% of my after-tax income every month. This is a goal that has increased over time as I've gotten more dedicated to impact my future returns. However, this is fairly difficult, so it might not be viable as a first goal. The first reason to save every month is that you make a routine out of it. When you receive your money, the first thing you do is to put money away for long-term saving. Then what you do with the rest you can do with a good conscience. Another is that it's a good way of averaging your buying prices. Let's say you're deciding to buy a stock over a 5-month period. In Swedish crowns, the first month it costs you 100, the second 75, the third 50, the fourth 75, and the fifth once again 100. At the end of these 5 months, the price of the stock is unchanged. However, your average buying price is 80 Swedish crowns. With 5 stocks and an average buying price of 80 Swedish crowns, you paid a total of 400 Swedish crowns. At the end of these 5 months, your stocks are worth 100 Swedish crowns each and 500 in total. This means that even though the price of the stock is unchanged, you've made a 25% return on investment. Hope you're all inspired to start your long-term investing. Don't forget to subscribe to this channel and to follow the development of the JSA Investment Club. That's all for this time. Thank you for listening. Thank you for your time, and see you next time.